Okay, let's take a look at problem number 2 on page 100 in the context of the demonstration problem that we just completed in the chapter. Once again, the chapter demonstration problems oftentimes provide an excellent template for the homework problems at the end of the chapter, and the same holds true for this particular problem. Notice with question number 2 that we're dealing with Loblaw manufacturing. So let's just go ahead and change the name. Here we have Loblaw manufacturing. FG. Okay. In addition to that, notice that it provides us sales for the month of June, July, August, September, and it looks like we need one more month, so we'll just tag on November. In addition to that, once we get into the text of the problem, it tells us that April and May sales were 115,000 and 135,000 respectively. So we're going to need the April and May information as well. So we can leave that in. All we have to do is overwrite the sales for each of the months. Okay, once you have the information entered in, remember to continue practicing those 10 key skills because those are important skills. Continuing on with the text of our problem, it tells us that the firm collects 35% of its sales during the month, 55% in the month following, and 10% 2 months after the sales. Now, it looks like this problem is set up identically, so all we have to do is enter in the percentages: 35, 55, and 10. Okay? Continuing on with the purchases, the problem tells us that each month it purchases inventory equal to 60% of the next month. Well, in this case, 60%, not 50%. And so if I double click in here, it looks like our formula is working perfectly already, where 60% of the next month's sales is going to be equal to our estimated purchases. So we're good to go there. Continuing on, when it comes to the payment of the purchases, let's take a look. It tells us the company pays for 40% of its inventory in the same month and 60% in the following month. Here, it looks like, we took 60% in the previous month and 40% in 2 months following. We need to change this one up. I'm going to let you do that on your own. However, so pays 40% in the same month and 60%. Now, 40%, you need to take the 40% times the month of the purchase. Okay, not the previous month like this formula has previous month. We need to change it so it's 40% of this month and 60% of this month. Okay, but I'll let you do that on your own. Continuing on, the problem says that it takes a 2% discount if it pays within the same month. Let's go ahead and at the bottom, let's type in a cash discount of 2%, 0.02. And let's grab the format painter so it looks good. Okay, going back up. However, we'll tie that in when it comes to the payments up here in the month of the purchase. We'll tie that in a little bit later. Continuing on, the problem tells us that the company has a minimum cash balance of $25,000. So down here, our last problem was $15,000. Here we have a $25,000 cash balance. Okay. However, in this particular problem, there is no maximum acceptable cash, so I'm going to delete that. Notice that caused a lot of my formulas here to not work, but that's okay. We're going to have to go back in and fix those up anyway. Okay, continuing on. it also tells us that the firm pays 6% annually for short-term borrowing and short-term lending. So we have 0.06 or 6%, but there is no lending rate, so this is one we'll be able to get rid of as well. We're just going to use the straight 6% rather than having the 6 for the borrowing and 8 for, or whichever it happened to be. And here we're just using, in this problem, just the one rate. Continuing on now, notice here we have short-term interest expense. I'm just going to go ahead and delete that. We'll come back and fix that up later, and we'll fix these other formulas up as we go. Okay, continuing down our cash budget, we've established that the collections are the collections from up above, so nothing that equals as well. Our inventory payments are what they are. You fix them up so that they're calculating correctly. The problem doesn't provide for any wages, any lease payments, or any interest payments, so let's just go ahead, highlight those rows, and delete. We're going to have an interest expense, but notice up in the chart where we have the month's sales and other payments. Let's go ahead and type in other payments. And as far as the other payments are going to be, it looks like in the month of June we have $80,000. The next month, $75,000. Whoop. 70. Oh, looks like I have, well, nope, that's right, because it looks like we are going to need to project everything over through October. So it looks like everything should calculate. I can just go ahead and highlight and pull all of our computations over. And I'm going to do the same thing down below. And it looks like I want to get rid of that shading in the background to the no fill. Okay? Okay, so I have other payments. It looks like there's no taxes and no capital outlay, so I'm going to delete those columns or those rows. Delete. Now it looks like total disbursements. Let's take a look at to see if our total disbursements is calculating correctly. We're going to need to come back and calculate the short-term interest. Otherwise, we're good to go. Continuing on, our ending cash balance, the problem tells us that at the end of May, we project to have $30,000. So, 30,000. Okay, so our beginning cash balance is 30. Our collections, okay, let's see. Our collections are 145,000 expected. So our collections minus the disbursements. Collections minus total disbursements, that looks good. Our unadjusted cash balance is adding those two up, so that's good as well. Then our current borrowing. Now our current borrowing formula, no, it's referring back to the minimum, 25,000. Let's go back up to the function arguments box here and examine this. If E25, so E25 is the unadjusted cash balance, if that is less than the minimum cash balance, which happens to be true, then how much are we going to borrow? We're going to borrow the minimum cash balance minus the unadjusted cash balance. So it looks like this formula is working correctly. If it's not, if it's untrue, if it happens to be false, then we're not going to borrow anything if our unadjusted cash balance is greater than the 25,000. Okay, so it looks like our formula is working. Our current investing formula, on the other hand, let's just go ahead and delete that for now. Okay, so it looks like our ending cash balance then is going to be a function of, and it looks like this formula is currently working, is ending cash balance is the unadjusted plus the current borrowing minus the current investing. Looks like we're good to go. Okay, then it's just a matter of coming back in and working in the current investing balance and working an if statement for that. In creating that if statement, let's just assume that if the company has an unadjusted cash balance greater than $25,000, then we're going to do some investing. So to finish this up, you will need to be able to go ahead and fix up your calculations here. You'll need to go ahead and fix up your, or to create an if statement here. And in addition to that, let's take a look at the second part of this problem, part B. It says the president of the company is thinking about stretching its inventory payments. So the idea is that if the company pays 0 in the month, doesn't take advantage of any of these 2% cash discounts, if it takes 0%, pays 0% in the first month and then 100%, that we will need to borrow less money because we're making fewer payments and we're stretching our accounts payable, so to speak. And so if we do that, the president is thinking that the total interest expense, remember how we did the scenario summary down here, or the scenario manager, we're kind of going to do the exact same thing. Based on the scenario of the first month and changing our payments or these percentages to 0% or 10% and change this to 100% or 90% and so on and so forth. Okay, so one more thing that I promised to do was to show you how to handle the 2% discount. Now the 2% discount would, if once again, after you have this formula fixed, it's not fixed right now, but if we simply multiply the amount of the payment times, in parentheses, 1 minus the discount rate, and close the parentheses, that would equal the amount of our payment less that 2% discount. Okay, and then of course you'll need to copy that across as well. Okay, I hope that helps you get off to a good start for the end of chapter problem, question number 2, and we'll see you again in chapter number 4.